Dun, dun, dun. Mic check. Mic check. Mic check. What's going on? First video of 2026. It's been a long time. It's been too long. To be honest, I have not been trading like in the markets a lot. I've been super like taken away from my markets. But I just graduated from this course, so have more time on my hands. Looking at the daily chart on the Nasdaq. Today is the 21st of February, 2026. Start of the new year, start of the new trading year. Very exciting times right now. Uh, prices looking like shit. Prices looking like shit. We can all agree that this is not optimal market conditions with everything that's going on in the world today. It's a crazy world. Uh, that Donald Trump really knows how to get people going. But monumental run 2025, fantastic record highs for the Nasdaq. 2026 real consolidation in the consolidation phase essentially. I'm just gonna review really quick some of the things that I do before getting into trade. I'm going to use Thursday, 19th of February. Um, okay, make this quick. Step number one. Write this down. I'm just kidding. Step number one for me is looking pre 7 a.m. in the morning, New York Eastern time. Here I will find a liquidity raid or liquidity sweep on sell side liquidity here, which in the wake of that created relative equal highs. Now, this is that's how I get my initial target pre-open. Now, fast forward to 9:30 New York Eastern time. Now I'm looking for a first position for Valley Gap. Boom, right here. First position for Valley Gap is a nice sell side imbalance, buy side inefficiency, which by nature is supposed to keep price down. And when it inverts like this, you could consider that an inversion for a value gap if other conditions are met. Other conditions. So what does that mean? So then I'll go into my number two, or sorry, okay, number one, number two step is finding the first position for a value gap. Number three is marking out 0830 opening price. That this is the power of three model. So then you go to the 0830 candle opening price. It'll tell you right here in the top left corner, 24,832. Bam, 0830 price. Let's mark that. Let's mark that. Noted. Now, the next steps I do in different order. Doesn't really matter. But I look if price is engaging in any of the PE arrays that I have marked out. This PD array is already marked, so I'm going to start with this one. New week opening gap of the 18th of February or January. I don't know. I should have marked it. I didn't, but it's one of those two. I think it's February. See how price fails to close any bodies below this new week opening gap. That's, to me, that's resistance, or sorry, that's supporting price to go higher. So bam. Next step, you go into the 4-hour chart. 4-hour chart really dictates lower time frames, like really like strongly. So what I'll do is I'll look for, so there's three main PD arrays you can use. You can use fair value gaps, which is this. You can use order blocks, which is this. Sorry, let me draw it out. This is an order block. This is a bullish order block. These two candles combined, which sends price up in nature. This is a fair value gap. See how there's like not much price action in here. It's not full, it's empty. Fair value gap, price will always refer to fair value gaps, or what people traditionally don't use or don't really believe in is discount wicks or premium wicks. See how this wick is like, why I'm not using that wick or why I'm not using this wick? Because this wick is bigger than all those wicks. And that's literally why I'm using it. So then I know that price is going to refer to this wick. So then, boom, let me just drop back down. I can mark all this stuff out, but I don't need to. I already see that it's there. The more stuff you have on your charts, the more cluttered it gets, the harder it is to read price action. So it's good just to keep it simple. Damn it. I hate when it does that. Okay. So now, this is the top of the wick. Top 7, like 0.75, 0.50, 0.25, 0. So it did go into the lower half of that discount wick, but it did not strike the bottom of it because the new week opening gap kept it at bay. Price did turn this fair value gap into an inversion fair value gap, which would indicate to me that price is going higher. This video is going a little bit too long, but I'm just trying to show you the steps that I take. Here we can see there's sensitivity on this discount wick level, and then it propulses price higher and higher and higher, comes down higher. So this day of price action was pretty bad. I mean, you can see it just like took a shit and then just like stayed on the toilet for a while. You can still navigate these markets if you use, I mean, all the things I'm using here. 0830 at open, where was it? Below price. If it's below the 0830 open, then you should be looking for longs. What happened here? Price went long. It didn't go long for very long, but still, you could have made money being in a long position. So this is a key indicator right here, though. The first presented for a value gap. See how it was inverted on this candle right here at 0944? That's an entry. And this would scare a lot of people. That's an entry, and you use, when you're using fair value gaps, inversion of fair value gaps, you want your stop loss down here. And this is not me like teaching this. This is what ICT teaches. So you want your stop loss at the lower. You can, you know, sometimes you can use like the bodies of the bodies of the formation of the fair value gap, but that's demanding price. Like when you do that, when you have precise stop losses, you're demanding price to be insanely accurate all the time, which is not realistic. It's better to give price space to breathe. Now I'm just going to bring you guys back into regular trading hours to show you guys one more thing that I use. Okay, let me just bring you guys back to Thursday, which is here. Boom. This is just another layer of indication. I don't know why I said that. I said it like that. I mean, how much more accurate, like how much more like algorithmic could I even get? Like this opening range gap. So it's the close of the previous day. So close 24,944. Okay, sorry, I'm off a little bit. It's right there. And then the open of the next day, 24,833, which is, oh, it's down here. Okay. So right there, you know, there's avoiding liquidity with, and you can't just use that with everything I just showed you. How could you not want to go long? Because you know price is going to gravitate in this direction. All right, I really have to go now. I hope you found this video useful. I mean, this is what I use. It makes reading price action like insanely I won't say easy, but because it's definitely not easy. It just makes it easy to study. It makes it easy to understand if you fucked up, like why you fucked up. And yeah, trust the process. Trust the process. I mean, the algorithm. I'm showing the algorithm in your face, so it's almost undeniable. Yeah. Hope you guys enjoyed. Peace.